Welcome to another day in the Matrix, waters above crypto. Today I'm going to jump straight into the charts and go over the technical analysis for Bitcoin, Ethereum, and XRP to share what I'm seeing in the immediate short term as we transition into this weekend. Lots to go over today in the charts since my last video. And if you haven't watched my last video that I posted, definitely go back and watch that. It'll fill you in on the Gematria decode I shared, breaking down the importance of this week, in particular as we move into the month of December. Also a reminder, I'm currently running a Black Friday sale for both of my courses, the Mastermind course and my advanced trading course, so I'll be sharing more details for that sale in a moment. So if you're new here, we do cryptocurrency technical analysis and combine it with Gematria, Numerology, and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated on when new videos come out. And make sure to give this video a like and share this channel with other conscious beings to help grow this community. And as you heard earlier, I'm currently running a Black Friday sale for both of my courses, the Mastermind course and the Advanced Trading course. So for those of you who want to learn how to do technical analysis and combine it with Gematria, there will be a link in the description box of this video and in the pinned comment below to my website, watersabovecrypto.com/Black Friday. And that link has the discount automatically added to the price, so there's no need to use a promo code at checkout. All you'll need is the link and you'll be able to get access to the courses with the discount. And with that being said, let's take the red pill. So a very simple yet effective piece of TA that I could share with everyone to start out this video will be these falling wedges. So I actually have the Bitcoin chart right now on the 4-hour, and I have it set with, instead of candles, it is area. This just removes the wicks and it gives you a much clearer picture of what's going on without all that excess volatility that you would normally get with candle wicks. So just a little pro tip for those of you that want to see how the market is operating on closures only. I really like the area chart and also the line chart whenever I'm doing my TA. In terms of a little bit more in-depth and not so dramatic price action, because of course in crypto this market's extremely volatile and we could see huge swings within a 1-hour candle and then it ends up being completely reversed within the next 1 hour. And that kind of stuff could really get in people's heads. So again, a little pro tip, try to mess around a little bit more with the line chart or even with Heiken Ashi if you want to have a little bit clearer of a picture of what's going on in the charts. Anyways, so right now 4-hour chart area, and then I have these falling wedges, and you can see that this was the prior distributional top that we had going back from essentially February and the beginning of the year over to May, before the larger dump we had around the 2 back-to-back eclipses that we had. And recently we just had an eclipse around this current full moon energy that we're seeming to leave today. The full moon / partial lunar eclipse was on the 19th of November, and here we are today on the 25th of November. We've had somewhat of a double bottoming structure, but I just want to break down how these falling wedges have been happening over and over again. They seem to be like a crystal ball of what's to come. So all in all, we can see when I zoom in, these falling wedges are playing out perfectly where we have somewhat of a descending or sloping resistance line. And once we break it about 75% to the apex of the pattern, we tend to just move up in a straight line. So you can see it happening 2 times in a row, and we're actually forming another one of these falling wedges. And I'm really interested to see how this is going to play out. Of course, I have a bullish bias in the short term. And when I say short term, I'm talking about weeks. I'm not talking about like a 4-hour, the next day. I'm talking about at least the next week or so when I'm talking short term. So this is really an interesting time because we're heading towards our monthly close in the month of November. The month of November typically is a bullish month, along with the month of December and also sometimes January. And January doesn't tend to be the most bullish month for Bitcoin at the end of a bull run. But again, we've only had 2 bull runs for Bitcoin to really prove itself as an asset. The first initial run that it had in I think it was 2008, 2009, it was pretty much a straight line breakout from a penny all the way up to $30. So that's not really, that wasn't much maturity, and it's hard to use that data to be able to determine future price action, of course. Since then, we've had a a new moon all-time high in December of 2013, and then we had a new moon all-time high in December of 2017, and now we're coming up very close to the new moon December of 2021. And this is seemingly a 4-year cycle, and there's been nothing so far that's decoupled us from that. So we're going to have to see how this shakes out, because this might be one of the first bull runs that we get in the last 8 years, where it's going to be perhaps a slightly different bull run. And that's exciting. As a technical analyst, it's nice to see patterns break, because it's telling you that, okay, well, there's something new here to look out for, and it allows us to kind of compile more data to be able to utilize for future cycles. So being open-minded and keeping calm and keeping your emotions on the sidelines are a huge red pill for those of you that are newer to this market, for those of you that are just getting in because crypto started to get popular, and for those of you that have been around for a while, perhaps over a year ago when Bitcoin was sitting around 10,000. You've had a hell of a ride watching this whole distributional top play out, a big dump, and then basically recovery. And right now you can see where this blue dotted line is where we're trading at today. And it's essentially just calling this prior resistance level a new support. We have dipped slightly below it, but that's completely fine. That's crypto. This tends to happen, especially with how much leverage is in this market. But all in all, this downsloping resistance line is something to keep an eye on. So you might want to draw these on your charts just to have something to look at that's a pattern. Now, there's a couple more things that we could talk about, one of which would be this 12-hour chart. I'm really interested in what's going on right now, because we have started to see the MACD flip into a bullish posture. You can see right there when I zoom in, we've had 2 green closes on histogram so far, I believe, and then we have the next coming in at the daily close, which is tonight at 7 p.m. Eastern Standard Time. Now, there's a lot that could happen between now and then, but the one good thing actually is because it is Thanksgiving in the United States of America, that means that the stock market is closed. The Dow Jones, Forex, and also the CME, Chicago Mercantile Exchange, are actually still open. Now, one other thing that's really nice that we're seeing here is a bullish divergence. So for those of you that are unaware, we're just going to look at it based on price action or the chart, and then also look at RSI, and we could see clearly that we have a downtrend in price right here, and then we have an uptrend in RSI here, or higher lows. Okay, so that's a very good sign. And this is telling me that we're at the bottom. Okay, this move that we got, this kind of fake out double bottom with a potential W breakout pattern, this is very bottom-like. And then because we have the data going back of these past 2 moves to the downside, essentially forming these falling wedges, which led to straight line breakouts, I don't really think this time is going to be much different, because cryptocurrency is extremely algorithmic. It works on essentially a algorithm that's pre-programmed in, and it likes to do what it does with the volatile swings to essentially wash out over leveraged players, essentially getting bear trapped and then bulls trapped, and they do that over and over again. So something to definitely consider, because when we started this bullish divergence that is clear here, I was also noticing that the beginning of it was around this dip below 30 RSI on the 12-hour chart. So we did actually go somewhere around 27, and while this candle was still active, it did get to 25. And when we go below 30 on the RSI, that's oversold. But when we start approaching 25, like you can see back here, we tend to reverse out of those levels. So again, we have a couple things to consider here. We have a oversold 12-hour RSI followed by a recovery through a breakout of this resistance line on the falling wedge, and then you recover. And it seems to be getting into the 80 levels where it likes to stop out before going a little bit of sideways and then continuing the pattern over again. And let's just see how clean that is. If I hold my cursor there, you could see around 80 on this structure and on that structure is where we go. Now, this might be the last time that Bitcoin goes into the sub 60K range for quite a while. We might not be seeing this until March or perhaps even April of 2022. So again, this isn't a long call out. This is just me letting you know this is structurally we're kind of at that point right now where we're going to start seeing this breakout. And when it breaks out, it's going to want to get above the 80 RSI. Once it clears that 80 RSI and then clears that, I suppose you could call it a bearish divergence, what we would get with that is most likely a move into the 90s. And crypto bull runs like to end with a weekly RSI around 95. So you can see here when we entered this distributional top, it did actually get to the 96 level on the weekly RSI. So that was a sign once we dipped down into the month of January and then headed up to new highs with a lower RSI, that bearish divergence was definitely tempting for people who were aware of how to do TA to kind of get prepared for a potential pullback. So I'm just letting you guys know in advance. Seeing this 95 RSI on Bitcoin is not rare. It happens. And that's most likely the next thing we're about to see in this bull run. So again, we're still in a bearish divergence on the bigger picture until we clear this 95. This is a downtrend on RSI with an uptrend to new all-time highs price discovery on the weekly chart. And you could see on the weekly again, when we're looking at the line chart, not candles, we're essentially just testing prior all-time highs and building support above those levels. That's very good. That's way better than what happened back in the beginning of last year, or the beginning of this year, excuse me, when we broke out above prior all-time highs in the 2017 cycle. We didn't actually backtest those levels. We just broke straight out through those levels. And it's actually better to see Bitcoin breaking out above prior all-time highs and building support on it. So when you're looking at a market technically, it's not good to have straight line breakouts. And that's why a lot of these altcoins that we're seeing break out, they tend to have 95% pullbacks during a bear market, because when they break out in a straight line, it's just FOMO. It's not structured. So again, some words of wisdom for those of you that are in altcoins out there. If you're seeing something start to get overheated on the weekly RSI or bi-weekly RSI, take some of your chips off the gambling casino. Perhaps even get your initial investment back. Again, not financial advice. So I'm going to go to the 4-hour chart. I'm going to bring this back to candles, and we're going to play around a little bit more with the TA in regards to using our moving averages. So we have the 4-hour chart right here. I'm looking at the 8 simple moving average and the 55 simple moving average, and that is what I call a wolf cross. So when this 8 crosses above this 55, that is signaling to me that we are ready to move. Another thing that we can see that's very strong is Bitcoin is now trading above the 55 simple moving average on the 4-hour chart, and we have a 4-hour close coming in about 20 minutes. The video will probably be uploaded by the time that happens. So anything above 58,300 would be the first 4-hour close we've had above the 55 going back to about 10 or 11 trading days ago. And you can see that this got weak once we had the wolf cross happen right here. This was showing weakness because whenever the 8 goes below the 55, that's a downwards pressure. And you see what happened? This became a dead cat bounce. All right, so you have your highs, you have a negative postured wolf cross, and then right here you have the bull trap into the trend line. So that's why this downsloping resistance line is going to be critical for the next couple days. Perhaps it could even be broken today. It's very normal for Bitcoin to make these sorts of, 4 or 5% moves in a single 4-hour candle. That's nothing for Bitcoin. So from a technical perspective, what does this tell me? Well, having this 4-hour close above the 55 is very important, but ultimately these 200 moving averages are something to keep an eye on. So we have the 200 simple moving average and the 200 exponential. Anything around this area with 4-hour closes is showing strength, but ultimately we would like to flip all these moving averages into a bullish posture on the 4-hour chart, and then we could look to the 6-hour, the 8-hour, 12-hour daily, etc. So right now we're just kind of in the midst of recovery is what I'm trying to say. We also have a W pattern going on right here. So you can see we have our first V, then we have our second V. The problem is it's pretty damn unstructured considering the second V was a lower low. This is very normal with crypto though. They like to shake you out into a bear trap to go short, and then they reverse it on people. It's very normal because they shake people out wanting to go long, and they're trying to play catch up. It's not a good way to trade. So you have your neckline right here, and this neckline, if you see it, aligns perfectly with the 200 exponential moving average, and that would signal to me, let's get ready for this W to play out. So if I turn off log scale and I actually draw a trend line from the neckline down to the 4-hour closures and then play that above this neckline, you're looking at a move into 64,000, which is still a lower high from this structure right here. So one thing at a time, but that would break us out of this falling wedge pattern, excuse me. So we were talking about the falling wedge pattern earlier in the video, and that would be really nice. Something essentially like this, where we break out, we back test the outside of the falling wedge pattern, and then make a new high from this structure over here. So there's so many things to say with this, but ultimately I do want to check out the daily chart one time before we move on to the Ethereum analysis. Okay. Lots of things and like lots of TA in this video so far. It's great. So, okay, what we're seeing here is we did have a bearish wolf cross. I suppose you could call it a negative implied wolf cross. That's not good, but this is very normal to get in this stage of the bull run, because Bitcoin, when it broke out last, it was just a straight line, and then when it tried making this new breakout, and then it was a fake out bull trap. This sort of fake out stuff, it really manipulates the moving averages, and it makes them as lagging indicators harder to read. So sometimes it might be better to be using shorter term analysis at times like this, and then just look at your macro charts for divergences and for the MACD crosses. Pro tip. So right now, getting a daily close above the 8 simple moving average would be big, because we haven't had one since, again, about 10, 11 trading days ago. So this 8 getting a daily close would be huge. And then if I pull up my other exponential moving averages, you're going to see they're all coiled up right around this $59,000, $60,000 level. So again, if that W pattern that I showed you comes to fruition, we're most likely closing above all of these daily moving averages, and then we're on our way to recovery. That would also imply we have a MACD bullish cross coming in very soon on the daily chart. This is looking good. Like, to me, this is looking very good. This was a solid pullback we got. It wasn't anything as bad as the 2013 and the 2017 pullbacks we got in November. Remember, if you go back to the charts of 2013 and 2017, we were looking at 30 to 40% pullbacks in the month of November before Bitcoin hit a new all-time high in December. Okay? This was only a 19% pullback. Like, it's not that bad. But remember, I told everyone, when we get this sort of pullback in Bitcoin in the final stages, we're gonna see alts get hit. And that's what we saw. We saw even like Cardano yesterday, it started making what's called a spring in Wyckoff. It's the blood in the streets. It's when RSI gets oversold. It's when you start to see, people get really worried. And people have so many negative things to say about it. But at the end of the day, go scroll, like zoom out, and you'll see how well Cardano has been performing over the last year. People get so fixated on the short term, but it's all about when you got in the market. And if you're just getting into the market last month, you can't be mad at a coin. Because you're not an investor yet. You can't just be in a coin for 40 days and then you're all of a sudden ready to make money. It's not how a market works. So patience is key. But all in all, that W breakout that I showed you guys, followed by, all the falling wedge analysis that I shared, essentially closures above 61,000 would set us on track to retest the highs of November 15th. And then once we're breaking the highs of November 15th, on a 4-hour close, anything above 66,300, I suspect a swipe up into 69 and then price discovery fairly quick. Perhaps we could see that in the same day. And if we were to measure where we're at from that, just with tomorrow, we're looking at about a 17% gain. So I'm not saying that'll happen tomorrow, but I do see us in the 70s by the end of the month. That would definitely be something that I would anticipate. Now, on the downside, of course, we need to share the downside targets. Obviously, I'm looking for the support line of this falling wedge. So that would be something around 55,000 again. No one knows what could happen at this point because there's so much leverage in the market and there's way too many retail trying to trade. So one other thing that we could consider, if I go to the 12-hour chart, we can see that this support line that we're getting on the falling wedge does align very closely with our 200 exponential moving average. So that's something to also keep in mind if we are going to have any short-term pullbacks. And we saw that happen right here, actually. There was 3 touch points before breakout. We've only had 2 so far in our structure, the one and then the one that we got 2 days ago. Started to reverse off of there, but if we look at the pattern in and of itself, it looks like we're pretty much at the place where we broke out in the last structure around the full moon of September. So this shit looks like identical. You see the 55 on the top, we broke out, got above the 55 after we broke out, and that's the same structure. So keep in mind, everyone, this 8 simple moving average and 55 simple moving average, if you want to really get better at TA with cryptocurrency, definitely study those and then study the wolf cross that I created. So let's move on to just a quick gematria that I wanted to mention. In my last video, I was discussing the importance of November 28th, and the reason for that is because it leaves 33 days left in the year. And then the 29th was important because it's the 333rd day of the year, which also is 2 months and 22 days from the start of Rosh Hashanah, which is the Hebrew New Year. And this Hebrew year, it was 5,782. And that gives us 22 when you add that all up. So again, 2 months and 22 days in the year of 5782, which reduces to 22. It's very important with numerology, and it will be the 333rd day of the year. Go back and watch my last video if you haven't seen that. This is telling me that we are probably going to see something happen volatility-wise in the next 4 days or so, leading into our monthly close. Now, I have one more date that I want to share with you that I think is important, and it's this day of the 2nd of December, 12/2/2021. And why that's important is because it's a palindrome, so you could actually read it both forwards and backwards. It's a mirrored date, and that's something to take into consideration because historically these palindrome dates play big roles. So I'm just wondering how this is all going to shake out because it has a connection back to Bitcoin by the numbers. When we add up the date numerology, 12 plus 2 plus 20 plus 21, that gives us 55. And of course, that 55 comes back to Satoshi Nakamoto, the creator of Bitcoin, who is Saturn. Okay. And we have that 55 right there, just like I was saying. So keep that in mind. This day is 2 days also before the new moon and the upcoming solar eclipse, which will be a total solar eclipse. It's a very powerful energy. So this is another day to keep in mind. Of course, I know I've been throwing about a lot of dates at people, and some people have said, well, what do you think? Are we going to go up on this day or down on this day? That's not how this works, everyone. It's not that we know with 100% certainty that a market does 3 things. It goes up, it goes down, or it goes sideways. The reason behind doing the gematria, the numerology, and looking into the astrology is to give us probabilities. The technical analysis is to give us probabilities, all right? The probability was that we were going to have a very good month of August. We were going to get stopped out on Rosh Hashanah. We were going to have a pullback into the Rosh Hashanah, post-Rosh Hashanah full moon. Then we were going to have a recovery through the month of October. Then we were going to have a pullback in the month of November after new all-time highs. And then the rest is we just have to go from there, So take it one step at a time. Don't get so lost in the exact date and what direction we're going to go in. That's not how this works. This isn't like voodoo, okay? So a lot of people are new to my work. A lot of people are new to Gematria. They might have already known about crypto, and they're just learning about this esoteric application for the code. And I just wanted to clear that up because I feel like it will help people not get so caught up in the exact days. It's not about that. It's just when the days come and we see, a 10% green candle for Bitcoin, if it happens to be on the 8th of November, you might have a reason why. And it's because it's the 33rd day left in the year. And 33 is all about transmutation, when ice turns into water, etc. So I've gone over this quite a bit. I'll move on to the analysis, but I did want to just make that little word of wisdom to share with everyone who's new here. And I appreciate everyone who's new here. So let's move on to Ethereum very quickly. We're definitely starting to see a breakout. Bitcoin's heading towards 59 probably while we're filming this video. So on the daily chart for ETH, this is looking beautiful. We might close above all of our key moving averages on the daily chart. Again, anything above the 21 exponential is looking great. And then ultimately, we want all of these moving averages to get back into bullish posture. And right now, they are not necessarily. We have the 21 above the 13, above the 34, above the 8. What we want to see is this 8 moving average, the yellow line, get back on top, and then it'll look like it did back here. Okay. Now, one of the things we can say about support on the downside is this 55 simple moving average is playing a beautiful support for Ethereum on the daily. And that is in line with the 888 fib. And it's also sloping upwards, which is telling us we're going to hold structure. So in the event we get any pullbacks, which I don't really see, we are probably going to be holding structure on this 55 simple moving average. So it's something that I think is important for everyone to consider. And then on the 12-hour chart, we're looking incredible. We can see that the MACD is flip bullish. We can see that the RSI is above 50. This is looking very, very solid. Potential wolf cross on the 12-hour coming in maybe in a day or so. And that would be the 8 crossing above the 55. This might be the first 12-hour closure we get above the 55 in pretty much going back to the same time frame as Bitcoin. So that's another very nice sign. And I'm going to show you guys something here that is clear as day, which is this W pattern. Okay, so the way that this W works is we have the clear neckline right here. Maybe by the time we have our daily close today, this will all be, you guys can remember this video and see how this all played out. Remember, I am not in logarithmic, I'm in linear right now. And then I'm going to take a measurement from the neckline down to the closure on the 12-hour, and I'm going to move that up right here. And typically how this works is we overextend slightly like this, we back test, and then we bounce up to our measured move. And if you see where our measured move is, it is exactly the current all-time high. Okay, so that's really incredible to see how this is most likely going to be back testing prior all-time highs very soon. Maybe even moving into the month of December, we might start seeing a $5,000 plus Ethereum. And this is one of the ways that you could determine that. So again, I gave you guys a pattern even to consider. It's a clear W. So downside target, I gave you on the daily chart, the 55 simple moving average, and then the upside target would be fulfillment of this W pattern upwards of $4,900. So let's go to XRP and finish this one off. Okay, XRP again also forming a falling wedge. We could draw this out, but again, I don't want to waste too much time, but it's something like this and something like this. So falling wedge on XRP, and we are getting very close. We're getting very, very close to fulfilling this pattern. And if I was to bring it into line, and I'm on also the 12-hour chart, you could see it's a little bit more easy to read what's going on. But all in all, falling wedge that we have going on here, this is a huge bear trap, in my opinion, what we're seeing, because it's continually holding structure. You could see lows, higher lows, higher lows, and this is nothing, in my opinion, to be afraid of. So on the 4-hour chart, we have something to talk about, and that'll be this 34 exponential moving average. That's the problem right now for XRP. So this red moving average right here is the 34 exponential moving average, and this is the 4-hour chart. We need to get closures above that. It's been having a very tough time getting above this, and we trade above it and basically get rejected instantaneously. So if XRP can have a 4-hour close above the 34 EMA, the next thing we would look for is this 55 simple moving average, which we haven't actually been above since the 11th of November. It shows you how sideways XRP has been. So we're getting very close to seeing this thing starting to make a move into the mid $1 range. And another thing to consider, we have these 200 moving averages sitting around $1.12. That's the next level once we break out of this falling wedge pattern. So we're very close. Not too much to say as of now. We can see that the 12-hour MACD has flipped, or it's attempting to flip bullish, probably within our daily close tonight. That's a good sign. But ultimately what I want to see is the 2-day flip bullish for XRP. And when that happens, this thing's going to move. So let me show you how clean this falling wedge is on this 2-day chart. Like, it doesn't get cleaner than that, everyone. And these are closures. So you can see the candle closures are what matters most. So we have a next two-day close coming in tomorrow night, and I suspect we should probably be out of this pattern by that close. We'll have to see how that all turns out. But XRP likes to do this, where it just literally reverses in a straight line out of any consolidation. So I'm going to end the video at that. We know that the upside target ultimately for XRP needs to get over the $1.40 range. It is suppressed. It's not doing as well as some other alts, but that's why it's important to talk about, because it's an opportunity. And we know that the downside is most likely any of our prior wick lows, which I don't think we'll be lucky enough to see XRP go below $1. Anyways, you guys heard about the Black Friday sale. It is going to be going on for a little while longer. Definitely take advantage of that if you wanted to get my courses at the best discount. My courses are now hosted on my website. You have the Mastermind course, and then when you scroll down, you'll see my new advanced trading course, which is very streamlined. It's about 40 videos teaching how I personally do my leverage trades, and it's a good skill to learn as we move into a bear market where traders are still able to make money and hodlers are holding the bag. So enjoy the rest of your day in the Matrix. Much love.